Morning, guys. Welcome back to the Everyday Growth Advisors live stream. Happy Wednesday to you guys. Hope you're having a good morning. Just a quick little market update here. Going to keep these as short and succinct as possible. If you have any ticker breakdowns, put them in the chat so I can do them for you after I'm done with my breakdown. It shouldn't take about 15-20 minutes or so. So just going to keep the story going here and kind of give you guys a lowdown on what to expect today. Remember that this is a week for OPEX, which means that a lot of options expired this week. And so this may cause market volatility. I think that right now the market is throwing a mini fit on taper tantrums, which they're expecting the Fed to make some adjustments. The NASDAQ is one of the biggest victims. It has been for a while. The reason for this is pretty simple to understand. If rates do increase, then valuations for tech companies start to come down, which is because the discount rate is based off the risk-free rate, which is the 10-year yield. So if the 10-year yield goes up, that means the risk-free rate is also going to go up, which means the valuation for stocks, primarily tech, which are overvalued, start to come down. So this is the reason why the market's throwing a tantrum and why tech is getting affected. In case you haven't figured it out yet, I thought I should just give you guys a quick little rundown. So that's what you need to know about the rates increasing here. Now, is this a problem so far? I don't think so. Personally, I'm of the view that we are just retracing back to the highs, or not really the highs, but the nominal rates of last year, which were at about 2.0, and coming back to those levels are nominal. Remember that the Fed has said that they will let inflation run higher, and now that inflation is running higher, the market is throwing a tantrum. So that's something that you can't please everyone with. The Fed can't please everyone with, and that's something that will continue to happen as this market unfolds. Okay, the 10-year yield though is up 3% this morning, and we might see it continue to go further up after the Fed issues its rate decision today. So remember, that's happening today. Sometime today, the Fed will be releasing its minutes, etc., etc. It will be important. That will be breaking news today, and I expect the market to throw a fit or be volatile or just trade in a weird mood throughout the whole of today. My biggest advice to you is to remain calm. Don't jump into trades unnecessarily today unless you see a clear technical formation or a technical setup where you can take advantage of. One of the ones that we took yesterday that might possibly pay today is Disney, which is coming to close a gap below at the 190 level here. We entered some puts yesterday. I believe I took some 190 puts on Disney right on this gap over here to cover it down. We'll see if we can get that today and continue on forward. I did take some trades that went bad this week because of the NASDAQ, but my risk assignment were very small, 2% here. This was a lotto on CCL, also DIA, which has yet to come down, and more than likely will go bad. But my risk assignment here, all in all, is about 5%, 6%, which is not too bad, all things considered. Okay, the rest of these are swing trades, which are okay, and the rest of my long-term portfolio holdings remain the same. I will be raising some cash by selling off some CCIV very soon. Not yet, but I will very soon, and so will I sell some Takeda shares to raise some funds to carry on options trading and carry on the momentum of the 10K portfolio. These are things that I have already planned in my allocation, and so I'll be sticking by my guns to ride up the next wave in tech, and so that's what I'm looking at in this next coming weeks. Now, the rotation from Dow Jones into tech, this was expected. I already actually forecasted this for next week. We got the rotation a little sooner, but we still haven't seen the full rotation yet. So I guess we will be on time after all. Once the Fed calms the nerves of the market, today we should see a rally by next week somehow, or rotation from the Dow Jones back into the NASDAQ. And just to give you guys an overview on what that looks like so far, putting QQQ on my left over here, and putting the Dow Jones Industrial Average on my right over here. You can see the clear disparity between these two charts. One is on a downtrend moving on its way up. One is on an uptrend, possibly reversing to the downside. So I fully expect a rotation to happen between these two indexes. The top 30s rotating into the tech that has been oversold. And that's one thing that you might want to keep track of and kind of just see if it plays out. Of course, we can't be right 100% of the time. Remember that this is not me trying to predict the future. This is just what I'm seeing in terms of forecasting, and usually these kinds of things have a funny way of playing themselves out. So what I fully expect is a Royal Rumble to happen where these two meet in the middle, and then after that one takes over the other, and then a reversion back to the norm where all three indexes are once again in sync. Now these indexes that are out of sync happen from time to time, and that's a nominal way for the market to deal with these reallocations. Okay, so don't be detested by it, or don't be confused by it. I know it is confusing times, but it's just a matter of corrections and rotations. That's it. So don't play too much into it. Remember to control your position sizing. Remember not to take on too much risk, and stay grounded and stay focused on what is to be coming ahead, okay, which is the next bull rally. All right. In other news, we have Pinduoduo briefly surpassing Alibaba in terms of valuation, market cap, which is not a big thing. Yields extend, Fed before the market, okay. And then U.S. warns banks over sanctioned Chinese officials. Remember, we do not read the news for anything apart from entertainment value. It is just for entertainment. We don't make any decisions based on the news, okay? So, yeah. Stocks futures muted ahead of the Fed. This is more than likely, as I was mentioning at the start of this week, we'll have a pretty flat market, bouncy market, etc., etc. Biden poses his first sanction Chinese officials in a meeting. Apple scores legal win in France over app privacy. Okay, Uber reclassifies UK drivers. Okay, housing boom boost. Prices for wood, copper, bricks. American Airlines joins debt market behemoth. Okay, lots of debt taken on for AAL there, long-term debt. So that'll be something that you gotta also keep track of. Okay. In other news, I wanna also mention very briefly that you can see the sector rotation heat map here. And we're looking at ETFs here. So ETFs, international ETFs, US indexes, and then US sector performances. This is the one-day performance from, let's say, pre-market, okay? And so you can see financials are being rotated into today, while at the same time we're seeing technology ETFs seeing some outflows. Once again, another step in the rotation. And if we look at this on the weekly basis, you can see everything's pretty much green except for energy here, which took a little bit of a correction after a monster rally. Okay, so those are things that you want to keep track of, and I'm just going to highlight them to you as I go along. Majority of the money flowing into inverse ETFs today. SQQQ, which will more than likely, this week, not today, but SQQQ, which tracks inverse for the Ultra QQQ. And so if you look at the one-day performance here, SQQQ and the rest of the inverse ETFs are bullish here. Okay, so that's what we're looking at. Price coming down on tech for the time being, and then maybe a possible rotation later on. If we look at, interesting. Okay, if we look at the pre-market, not the pre-market, year-to-date performance of the S&P 500 here, you'll see a majority of the market is green, with the exception of Apple, Adobe, QCOM, Amazon, Tesla, a bunch of stocks that are undervalued. These are actually considered value stocks. Majority of them, except for Tesla, obviously. Apple is considered a value stock. Even Amazon, I would argue to say, is a value stock. And so are all of these right here. So value isn't really being bought up that much. But energy and financials recovered extremely strongly this year to date, since the start of this year. Okay, one-day performance here, pre-market, you can see majority of everything is red. And we can see more than likely rotation happening to financials. So watch that today. After a 2-day cool down, this should see a little bit more rally picking up here as the Fed makes a decision today. Okay, so don't go crazy. Just guide yourself, and I'm sure that you'll be doing fine this week. Just don't overextend yourself. Any buys? Okay, we have some buys. Hayward Holdings. We have a bunch of the insiders buying shares. I want to say quite a sizable amount as well. This is 136,000, 943,000. Yeah, quite a few shares being bought here by Hayward Holdings, HAYW. So look that up. Make sure that you check what's going on there. Why are they buying a lot more? Hudson Global as well. Frequency Electronics. This also Image Sensing Systems, IS, and then United American Corp. Seeing lots of inflows from insiders. Remember, insiders only buy when they have a reason to invest in their future. And other than that, I don't see a reason for them to buy their own stock. So that's a quick little update on insiders there. Keep track of those tickers. Make sure that you're following them. and then also some big sellers as well. So yeah, 9%. What is this one here? RHP, REG. Okay. All right, cool. That's your insider information. So daily treasury yields here spiking up a little bit higher, and we'll continue to monitor that. All right. So let's go on to look at the technical update for Nasdaq SPY and the Qs. Sorry, the Qs, SPY, and the Dow Jones. So let's start with the Qs here. A while back we were hoping that the Nasdaq futures, we would get a retracement back down to this level here. I don't know if we actually will. Looking at a 4-hour chart here, we broke out of a long downtrend here that was forming, and it looks like we are coming down for a correction. The key level here to watch will be the 12751. If we get a retracement back to this level, this would be the line of defense for bulls today to continue this rally going to the upside. Okay. If we break below this level here, then we see further downside back down to this level here, which is the 12,200s, 12,400s. This will be that little downside correction if we get there. Will we get there? I don't know if we will. Let's see. We can't forecast the future, but we'll see what happens here. But in terms of how this trend is going, I think more than likely we'll see a kind of a retracement back here and then further run up after. In terms of the S&P 500 E-Future Mini, we have pretty much a triple top scenario. We failed to break out and make higher highs, but maybe a correction back to the 3,900, which is the key level here, is a key level to watch. This may be a double bottom after all. So the 3,900 is a level, and then if we get a more smaller correction here, the a level above that should be around the 3,917 level, which is a dotted line right here. So about 20 points up above that should be a key level for a corrective wave down. If the SPY continues to throw a tantrum today, then we might see another wave up after that. This is where I see the S&P 500 coming down. That's a short correction. If we go further down from that, then we're going to come down to the 3878s, which are way below over here on the 150, and also a dual zone you can see right here as a point right here. Okay. On the Dow Jones, I feel we are pretty overextended. We need a pullback, but because majority of people are investing in value rather than growth right now, this is what is holding up this entire index right now. Since Dow Jones is usually filled with financials and filled with value stocks that are stock market leaders, so we can see majority of the indexes of this index is being held by those companies. Okay, the first level of retracement back here would be the 32,200. So let me go ahead and draw a line there real quick. This right here should be the first level of bounce if we get a corrective wave down. If we get a shallow bounce, then we'll see this level as being the bounce. So these two levels are key levels for the Dow Jones futures, coming down to test 32,532 and then 32 ultimately. This will be nominal corrections, and I would like to see the Dow come down here to rotate into Nasdaq so that this can go for the next wave up. That would be the scenario here for the Dow Jones Industrial Average. Okay, okay, cool. So I covered them mostly here. Also, if you guys are here, you enjoyed the stream, see our breakdowns, make sure you click the like button. Thank you very much for attending the stream. I don't ask for much, help me out there if you can. Clicking the like button does help me out a lot, and I appreciate you being here and taking your time out. Okay, thank you. So if you're taking any positions today, I recommend to take bearish positions. Have a bearish slant on your positions at least. If you're planning to scalp, you're planning to do something, make sure that's what you do and you might want to concentrate on scalping from the Nasdaq rather than scalping from the S&P 500 or the Dow Jones, since those are considered almost close to the all-time highs. This does have a little bit of bearishness associated with it, and so I would recommend picking up techs to scalp. All right, cool. Now, what am I expecting for the Fed decision to be like? I don't think that the Fed is going to spook the markets. I think that, if anything, they will reaffirm their statement on holding through a commitment of a non-hike interest rate Number one. Number two, I think absolutely that the Fed's inflation target is still not being met. Unemployment target is still not being met. And we're seeing across the board with higher expenses for this new economy or new nominal status where businesses are opening back up into this COVID environment. I think that we may see a nominal saturation of demand, pent-up demand entering the markets very soon by the mid-year. However, I do see also the possibility of the Fed hiking interest rates sometime next year, but provided how we see the data come in the next couple of quarters based on unemployment. I think the major thing that the Fed is going to concentrate on is unemployment. And once we hit our unemployment targets, when we are getting slightly better unemployment, that's a time when we should be getting worrisome on how we're going to start positioning ourselves with our portfolios and look at how we can anticipate the next pullback. Of course, we are far, far, far away from that. And I think that we will go sideways a little bit before we even go back to all-time highs here on the NASDAQ. So just continue watching for unemployment and major economic numbers, because that is what is going to drive the economy eventually, okay? Now, the U.S. economy has been very resilient. And so with the resilient economy like that, I think it's very important to note that we will continue to see resiliency and growth. In fact, I would say that we might post better than expected GDP numbers this year because of the low growth rate last year. Okay, so it will not be a shock, and that will be something that will cause investors to rush into the markets and cause inflation to run even higher. And that's when the Fed will step in and say, okay, this is where we need to start tapering things down, and etc., etc. Is it going to happen now? No, I don't think so. Is the market trying to price it in now? Absolutely, yes, that's what they're trying to do. Is it a good thing? Probably not, but it is also the way of the market to signal the Fed what they think is going to happen. Okay, so remember, the stock market is a leading indicator of the economy. All right, cool. We have about 15 minutes more. I'm going to wrap it up with the JD valuation. So the valuation for JD this week, I just want to go through the financials real quick over here. Morning, guys. What's up? Morning, T. What do you think about the butterfly trade, BTO, butterfly, BABA, 18 June? Let's see, 310, 310, 320 call. I think it's a good idea. I think that's cool. Yeah. However, June might be a bit tight though. I mean, I all things considered, I think you'll be okay, but I feel like you should go a bit further out. This whole Chinese tensions thing's really got everybody in a knot. What time's the Fed decision? Yeah, it should be somewhere around after 2 p.m. Okay, let's go through JD real quick. So I did with this company, it was not sufficient for me to do one valuation. I actually had to go ahead and play with a couple of valuations. So I had to do a multiples valuation, which I aggregated here. This one was from so with this one I didn't do it. This one I'm taking Finbox valuation here, and then I did my own valuation on the 10-year DCF EBITDA, and the 5-year is also a fair valuation, which I was looking at. So I'm deciding to use a aggregate between these two. Now, just to go through this real quick on the earnings here. Net revenues have been seeing pretty strong growth year over year with JD, okay, and that's a good sign of the market. Another thing that we usually look at is operational cash flow, which has been growing in the past few years, okay. A good company will have good operational cash flow. Show it. Okay, maybe it doesn't have the information. Okay, so if we go back on their statement of cash flows, they actually have decent operating cash flow growth for the past 3 years or so. That's a sign of a good, healthy company. Our cash flow is at least positive from operations, which is a good thing. Okay, we also look towards ROE analysis, which is understanding if this company has positive ROE. And so if we look at JD ROE. Come on. How do they not have JD? Huh, okay, interesting. Macro Trends doesn't do it for JD. Weird. Okay then. We'll just skip that. I was going to try and pull up the chart for the ROE. But you can see ROE from Morningstar here. Return on equity is about 25%. And it's a 3-year annualized. So it's positive ROE here, positive operational cash flows, positive revenues. That passes 3 of our 6 steps. Management wise, we need to look at more of the leaders. The problem is we don't know much about these leaders, but you know, we will continue to see so if we can find out more about them. Make sure you guys smash the like button, guys, if you can. I truly appreciate it. Thank you for being here. Okay, so going on with this, economic moat wise, JD does have a pretty decent moat, but it's a narrow moat. It's not really a wide moat, in my opinion. They have pretty stiff competition within America, which is Alibaba and Vips and a bunch of other companies. If you want to see who their actual competitors are, you can have a look at them. They're right here: Alibaba, Vips Shop, Light in the Box Holding, Leju Holdings, Porter Holdings. These are all their benchmark against them for EV over EBITDA multiples. And based on all those things, we can see how their GAAP gross profit is increasing. And they are, you know, kind of decreasing their investments in other areas. The operating profit margins are increasing as well, which is good, but not the best. Their profit margins, as you can see, are not exactly amazing. It's like 2.8% net, you know, operating margin, and then they have operating loss in other areas of the business as well. But one thing that's great is that they have really good operating cash flow. And remember, I always mention this: cash is not the king; it's cash flow which is the king. You know, a famous quote by Grant Cardone, if you guys know him. For a business, you don't concentrate on the amount of cash it has; you concentrate on the cash flow that it has. That's what really generates the ability for a business to make it. Okay, and so they have good operating cash flow, which is greater than their net profits, and they can see that they will probably dump that into great investments in the future, which they are actively doing. Their cash flow from investings are like pretty big. You can see it, 41 billion right here. So they're putting a lot of money for expansions, and that's a good thing. Inventory turnover days is 33.3. It's decreasing, which is good. We want to see that continue to decrease. Inventory turnover days is the number of days that inventory is is sitting there not being sold, and so this is a good thing. Annual active customer accounts increasing nicely year over year, quarter over quarter. You can see that they're increasing. They're almost at 471 million now, which is great, considering they have captured almost you know, a third or maybe less than a third. Maybe a quarter of Chinese stock market, online market, and which is a great thing. Account receivables looking okay. Free cash flows, you can see trailing 12 months about 34 billion, which is great in RMB. And then they continue to increase their logistic networks, etc., which actually puts this company in a very interesting position. Okay, so that's one thing to note about this company. Now, in terms of valuation, so let's have a look at it. So now, this company, from a multiple valuation from EBITDA, when we're looking at EV, the enterprise value over the EBITDA value, which is, in short, we're looking at how much you know, this company is willing to grow over its benchmark, right? Or what is the trading multiples for, you know, this bunch of companies versus its own. This gives it a slightly lower fair value because of the broader sector expectation here. Okay, in comparison to their competitors, they have a lower multiple. But I think that the idea there is a little skewed because Baba is a business that doesn't hold inventory, but JD is. So the business models are a little different, and so we need to take into account their growth multiple as well. So we can't just take this into account. So we can hold this valuation and think of it as one part of the valuation, right? And we allocate a specific weight to it, and we say this valuation, which has a 33% downside from the EV over EBITDA multiple, will give us a maybe 25% allocation of their you know, their valuation. So we take you know, for example, we do 0.25 times 56.71, which is 14.775. So And then we go into the rest of their revenue multiples. So here we have EV over revenue multiples now, and this gives us a 94% valuation, and we can take a 25% valuation of this as well. And so we can do plus a 95 times 0.25 or 0.3, that's fine. And then we go over to the 5-year DCF valuation, and we take this as another 25% plus 0.25 times 90. Oops. Definitely messed that up. Yeah, I'll write it down right now. Easy. Okay, so 56. Let's just do 57. 57 times 0.25 is 14.25 plus this allocation here, which is 95, and that's going to be 23.75. We do that as a weighted calculation, and then we come here and we take 25% of this one, which is 90 times 0.25 is 22.5. And finally, we come back to our fair value, which is a 10-year DCF growth model. This is obviously the highest growth model, and I've taken this to the conservative side. Remember, very conservative valuation here. 10-year EBITDA exit. This will give us about a 27 or 28 value. So 28. That means the fair value of this company is sitting roughly at about 88.50 after we take it all into account. Okay, so this company is at fair valuation, pretty much at fair valuation, 88.50. So we'll do this, and we'll add this fair valuation here. There we go. I'm going to make that a little smaller. So as of right now, this business is worth about $88.50 based on our allocation of different weights of different valuations. We can't just take one valuation as the cake here because there are so many things that play into this business's valuation. Just like a traditional business model, the thing is that this business is not a matured business. Number one, it's a growth business. We can't take a full DCF valuation on this one. Why? Because we need to convert these valuations based on what the growth exit would be, which I've done a 5-year model for, the Garden growth model, and then the 10-year DCF for EBITDA, which is the operating cash flow, which is what I would actually use to model this business, in my opinion. Then we use and balance it out with the multiples so that we get two different types of multiples and use a skewed valuation so that we get equal parts of all the valuation there. So that brings us to the complete valuation of $88 or so for this business, which is it's been trading at the fair value actually, which is actually fair. It makes sense. Okay. In terms of growth, I think this obviously what the stock market prices in is a different thing altogether. So there you have it. You have a valuation for JD now. So let me answer some of the questions. I like the new shorter suited format. That's great, David. Thank you for your feedback. I appreciate that. What sector are you liking for April? I'm liking tech for April. And when I say tech, I mean growth tech, value tech, all the tech. Anything to do with this sector right here on Finviz. Let me show you. This sector right here. Semiconductors are also great for April, in my opinion. Also, communication services good. And consumer cyclicals will be good as well. These are the main sectors that I'll be looking at for April. Palantir 30 call, 16 April. I got 26 March, but thinking of rolling it. Definitely roll it. I have an April expiration as well. I have a 35 call. It's going to get murdered today, but that's completely fine. I'm willing to hold it. My allocation in that option is so cheap. I only spent $2.40, and the upside is huge on that one. So not gonna sweat it. This is a very, very, very small price to pay for a higher trade. Even Neo here, I allocated a very small risk to it for April, $50 calls, taking a swing position in there, and to see if we can play the upside there. So yeah, I would say roll it for sure, Jeffrey. Would buy more time or a closer price, Jeffrey. Yeah, exactly. So that's what I said. All right, awesome. And just like that, it's 9 p.m. These newer live streams, they're going to be short formatted like this. I think, to the point, succinct, no more rambling, no more me going on rants. And I think it's going to just be what you guys need for getting through your day. In terms of other news that maybe I need to notably mention before I get out of here, SPACs have raised $83 billion through this year. There's a big semiconductor shortage, which I have been covering since last year. Remember how I was talking about last year? I told you guys AMD just released a Ryzen chip. What would happen? They would first release the chip, then what would happen? Demand would spike. And then they will be short of chips. And then what will happen? Prices of chips will go up. And then they can't bank on that. So that's actually bearish for semiconductors. And then after a while, they will start to kick in with supply. And then semiconductors will start to oversupply. And then it's the time. Now is actually the time to pick up semiconductors, because as they start to increase supply, that's when you're going to capitalize on the shortage of chips coming down. And then these companies will start to make a killing, which will be priced into the market. So this is the right time when they're selling off to start buying, since semiconductors move on a complete cycle, and now we are at the point to buy semiconductors, okay, on that cycle. Just putting that out there for you guys. And okay, yeah, apart from that, not much else, guys. I hope you guys have a great trading day. Thank you very much for attending. Make sure you smash the like button on the way out. Appreciate you taking the time being here, and I will catch you guys on Friday. Another thing, next week I might take some time off from the live stream. Might not hold the live stream at all. The reason being because I have finals for my school, my masters, and I want to make sure that I get good grades for them. So I want to study, and I think I might skip live streams next week just so that I can concentrate on my work. And I also have some major reports and presentations to give, and so I might take that time off to get that done, and then I can come to you guys back the week after and really give it my all here, so that I don't, I'm not skewed in my the way that I do things. So I would appreciate your patience and your support through that time, and I truly appreciate you guys all the way through this year, and coming here and taking your time out. Okay, so thank you very much. Have a great day, and I will see you all on Friday. We will not pick a ticker for next week, but I'm sure that you guys will enjoy Friday's live stream anyway. And yeah, we'll see you there. I'm going to jump onto the Discord right now so that we can get started with the live trading session. And I hope that I'll see you there in the near future. Take care, guys, and I love you all. Thank you. Bye.